One of the greatest advantage of being a trader is that you do not require any education. As education teaches us how to read and write languages, and languages are localized. For example, a person learn one language in one culture may not be able to read and write another language in different culture. But the language of trading is universal, is based on pattern. Anyone either ever have gone to school or no from any culture can learn trading, as our brain is very good at recognizing patterns. And that's the biggest advantage of becoming a trader, is either you have ever gone to school or no, learned anything or no in the past, you can learn trading. And this is what in this video today I'm going to explain how to recognize the advanced chart pattern. Now if you are a trader, cannot make sense sometime how the chart patterns form and why the market move the way it moves, this is exactly the right video for you. I'm going to show you with proper examples how to identify the advanced chart patterns and how you can use it in your trading. So before I begin this lesson, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. So without further delay, let's get started. Okay, traders. So first of all, to understand the advanced pattern, let's understand how this pattern created and how we can read those language of the market. Now to understand this pattern, the first thing that we need to understand is the rhythm of the market. Now you'll find rhythm in everywhere. There is a rhythm in nature. You can see the seasons coming, and also you can see rhythm in, if you go to the sea beach, you can find that rhythm, the waves of the water. So everywhere there is a rhythm. And also there is a rhythm in the market. So the rhythm in market is trend. So you'll see that more often the market will move in a trend. Now that means that we first step to identify a pole of this trend. Now this is what I call the pole or the impulse. Without understanding or without identifying where it comes from, the first step to identify the advanced pattern is to know that where is the pole or the impulse. So once we can identify that pole or the impulse, we know that which way the market is heading. So the step number one is to identify the pole or the impulse of that pattern. So if you look at here, you can see the market, probably you could see some kind of consolidation or any zone. We are picking a random piece of that market to understand when this pole is formed. I'm going to show you quite a few examples in the live chart. Before we go to that, let's understand this one here so that you can clearly understand what I'm going to show you later. Now, once we can see that pole, once we can identify that pole, next we need to look at a consolidation. Now, this consolidation can form in many shapes. That's what the pattern coming in. Once we see the pole, we need to identify that pattern. This could be in many shape. It can be a triangular pattern this way, or triangular pattern in that way, or it can be what we call a bull flag, forming a descending channel, or it can form in an ascending channel in an uptrend. It can form in a semicircular structure. So it can form many shapes that we will look at in the chart, but this is not important what the shape is. The most important part is to identify a shape in the chart. So as an example, we have looked at here a triangular pattern in the first phase of this pole. Once we can identify the shape, the next step is to look at the market to break from that shape towards the downside in an uptrend. This is the key. Now the market may do or may not do. So we'll look at two important possible scenario. In the first scenario, we'll look at that this is the support, and from that shape we could see the market has broken below, and once it has broken below, we could see that straight back up at the top of the shape. Now once we can identify that it has broken from that structure, it grabbed that massive amount of liquidity here, and once the market managed to bounce back up above the shape or above the pattern, that's where the opportunity comes in play. Now there are two possible scenarios as we discussed. One, if the market first doesn't break from that shape or from that pattern or from that structure, without breaking below, the market return back up, there is a high chance that the price will come back again to break that low before it finally trend to the upside. This is a very important key point. So to enter in a buy trade, the high probability setup will be once it breaks below and then return back up above the resistance line or the swing high. That's where we will be looking for buying in this market. Now in the second scenario, if the market didn't break this low, that means that if the market did not break that pattern towards the downside without breaking below, if the market managed to bounce back up again, then we need to wait for the market to drop back again below this low. It could come back or could not come back. Now if the market come back again for another retest, the same scenario that we need to wait for to return back up again to create a new higher high before we find that entry opportunity. And once we see the market has done that, next step is to enter here. Stop loss always below this pattern. This is the one scenario. Now let's look at another shape or a different shape. Now the same pattern, once the market managed to break from that structure, it formed another pole, and once it formed the second pole, we could see a different shape or similar kind of shape. Now in that example, we are looking at this rectangular pattern here. Now this is a pattern that you can see the rectangle, and with that rectangle, what we can see the market, we could see that again the price has broken from that support and grabbed that liquidity, returned back up again, has broken that resistance line, returned back again to the retest that support, and then we could see that return again to the upside. Now for our potential entry, we always will look for the pattern that has either initially tested the low and then bounced back up, or it returned back again from the resistance to retest that low and then return back up. This is the key. I will be showing you quite a few examples. If you guys finding it easy, take notes. If it looks difficult, don't worry, you will have a plenty of examples to make it simple for you, as this will change the way you look at the market. Now let's look at the third example with the same kind of scenario. You could see that pole, which is an impulse, followed by, we can see that there is a circular pattern here. Now that circle that you can see, if you guys look at it, you can see this is a circle, and it may take any form. It could be semicircular, it could be or any other shape. as long as it forms a structure and has broken from that structure, that's where we will be looking for entry. Once we see the market either has broken below, has crossed above, or it has crossed above and then return back again to the support level. So these are three fundamental examples. There could be plenty. So now let's look at the chart to implement how to identify this advanced pattern. Okay, so let's see this example on euro dollar. Now, as we mentioned, this is a very important advanced pattern. So it may not happen all the time, but when it happens, that's where the opportunity comes. So if we look at euro USD, 15 minutes perspective here, what do we see here? Let's replay the chart to understand it clearly. Now, there is a pole. This is the key points. Now you can see we need to look for a market that has a strong impulse or a strong pole. Now, how do we know that this is a strong pole or a weak pole? The way we can know is from 10 and 20 EMA. So if you look at here, you can see this is a 20 EMA that I placed all the time in my chart. You guys see that? And also this is the 10 EMA. So when you see the market separated from 10 and 20 EMA clearly, that's where the strong pole. Now we can see that there is a quite a few strong green candles, strongly impulse to the upside, followed by it has formed that ascending structure here. You can see the market slowly forming series of higher low here, consolidated in a certain level, and then after this formation of this structure, the market managed to bounce and has broken to the upside. Now this is the key here. The most impatient trader might get caught up in that area as the candle closed above. It's a valid breakout. Everyone will think to buy from here. But the thing happened is that once the market has gone back up, we have seen that in that scenario, the market managed to again drop. You can see it has almost returned back below the structure. This is the key, guys. As I mentioned, this is the high probability setup as it has broken up and returned back again, broken back below the support level of the previous all swing low, as this kind of breakdown is high probability setup. As when the market was breaking down, we can see a clean impulse directly hit that level, and later the market, what happened that it managed to bounce back up with this momentum here. Now what we can see afterwards, the price, and it didn't look back up, it just bounced back up, and it's a huge high probability setup. Now once we see the market grab this kind of liquidity, that's where the key points. Now you can see it bounced back up with this stronger momentum, and that's where we can see the price managed to bounce back up, and we can see an important impulse happen. And that's where the entries, once we see this kind of structure formation, the price managed to bounce back up. That's where key entry point in this market. And you can trade with 221, 321, this kind of opportunity once we find that. Now let's look at a couple of more examples to understand it clearly, how to read the advanced pattern in the chart. Okay guys, so let's look at this example on XAUUSD in 5-minute chart. Now this can happen in any time frame, and it's valid for all time frame as long as we can identify that strong pull and the structure. So if you look at the 5-minute chart on gold, we can see that here is the impulse, a clear impulse, followed by a structure formation. Now what kind of structure it has formed? If we closely look at it, we can see that there is a structure formation here. The market consolidated for some time, broken below, has bounced back up, and then what happened? The price completely returned back again below the previous support level. This is the key points that we need to look at, as once the market managed to break out, it has broken completely below the previous support level. And once we see the market has broken below the previous support level and immediately rejected to the upside, that's where the opportunity is. We have seen this support has been completely violated with a very long rejection. Long is very important, as once we see this kind of support is broken with a bigger candles, that's a high probability that the market could return back again in the major direction of the trend. And we can see the price in fact tested that support and then completely returned back up with a stronger momentum, and as a result we can see it managed to have another bigger impulse. And when the price gained this kind of momentum, as the price has broken up, returned back up, it grabbed liquidity on both sides. What does it mean? It means that when the market has broken, a lot of buyers bought who stopped out when the market again returned back below the support level, and therefore it gained momentum. It has liquidity in it. Now, once the market managed to break out, this is the zone where the real trader will be in the trade, keeping the stop loss below this low, and we can see the health of the candles are stronger. That means that there has been volume in this market, and that's how we can find better setup after this kind of advanced pattern formation. Let's look at a couple of examples to find different shapes, and also make sure you take notes to understand how to read advanced pattern in the chart. Okay, so let's see this example again on XAUSD 1 minute chart, lower time frame, but still once we see, we can identify the impulse, the important pole. It gives us a huge opportunity even on the lower time frame. That can give us quite a few trading opportunity during the same trading day. So you can see that XAUSD 1 minute chart, this is the pole here, a pretty strong impulse. And after this pole, what we have seen that there is a semi-circular structure formation, and that's where the opportunity, you can see the market has formed a very nice looking semicircular structure, and without breaking below properly, we can see the market managed to break from that zone, and after that the price again returned back directly to that support level where there is an important liquidity zone. Now, if we closely look at the nature of that breakdown, which is the key points here to look at, if you guys look at, you can see the nature of this breakdown is identical. It's a complete red, a full length breakdown. When we see complete breakdown without proper pullback to that important liquidity zone or the support level, that's where the opportunity comes. As the market has tested that such an important support, we have seen that kind of breakdown. That's where the opportunity comes, and we can see that in this situation we easily can enter after this bounce with a stop loss below this level and targeting 221, 321, depending on your preference. At least should be 221 to stay ahead in terms of risk reward. Now you could see this kind of pattern repeating over and over in the market. Once we can identify that, our brain is smart enough to spot them whenever it is happening. I strongly believe that, guys, you enjoyed this very important lesson on understanding the advanced pattern, how to identify them, trade them with proper risk management. Now, if this video was helpful to you, make sure you stay connected by subscribing to the channel, and also press that bell button so that you are notified as soon as I'm releasing new content in this channel. So with that said, thank you, and I'll see you very soon again in the next lesson.